Today, something just happened in the markets that has not happened since 2009, and our stocks basically just pausing before the next. Now, if we come over and look at the S&P 500 real quick, notice intraday, we spiked up only to come right back down. And as we come over and look at the 30-minute chart real quick, notice what profile shape we formed today. A D is in dog. So what does that mean is in store for tomorrow? Keep in mind, the day before the holiday tends to be more bullish than bearish. So let's see if Friday lives up to those expectations. Now, we come over and look at how the indices fared across the board today. The Dow was down $1.35. The NASDAQ was up 53 points. S&P 500 down 2.6, with the Russell 2000 being up 0.04. When we look at advancing issues versus declining, however, we had more issues advancing on the day. 55.8% of issues were positive on the day. Then when we come over and look at the sectors across the board, we can see utilities by far taking it in the keister, down 0.98. Consumer cyclicals, technology, and communication services, we're outpacing everything else to the downside. Now we look at the fear and greed index right now sitting at 67. We are basically almost dead smack still over into greed. Then we get the most recent investor sentiment survey this week, and notice we have a bullish reading of 37.7. That is right in line with the historical average of 37.5. We can see the bears backed off a little bit at 36.7. We look at the dollar index today. We have a wick on the top. We have a wick on the bottom of the candle, kind of a larger type of body. So I wouldn't really say this is a spinning top type of candle. The body is almost as large as a prior candle. Now we want to pay attention to the dollar index, and not only the dollar index, but we also want to pay attention to the 10-year yield. Today, earlier on, 10-year yield was up a little bit higher, but then closed in the lower third of the range. Something we want to keep a very close eye on is the 10-year yield, and is it going to go ahead and complete this A to B equals C to D pattern right up here about 4.86%. If the yields start rising up towards those levels, that is going to be a problem for the market. We can already see right here existing home sales, weakest April since the great financial crisis. And you see by this graph, it's been quite a while since we've been down towards this area. So what is causing some of this problem? Well, we know one, the higher the yields are, the more expensive a mortgage is going to be. It means less house that a consumer can buy. Then we come over and look at things like this. Investors are rattled by rising US bond yields. They should be more worried about Japan. And if we go over and we look real quick and we look at this graph, look at Japan's 30 and 40-year yields, we can see this is just absolutely screaming on the way up. And, this could be a problem brewing. And think about this. When the yields are rising over in Japan, is that going to make the US a more attractive asset to buy or less attractive? And think about this. If there's less people willing to buy our bonds, what is that going to do to yields? Can you say 10-year yield? Bam, ABC pattern, completion, and maybe even higher up from that point on. Then we throw onto the fact that Trump's tax bill clears the House in a victory for Republicans, advances to the Senate. And what a lot of people are going on to say is, this is essentially going to cause more debt. And you might say, well, Mike, that's fine. We can handle our debt. Well, can we? Because let's not forget, it wasn't that long ago when Moody's downgraded the US credit rating, which was essentially last Friday. And we saw the 30-year Treasury yield top in 5%. And again, this is going to play havoc on the housing market as well. When the yields are rising, this is not good for the housing market. If you guys lived back in 08 and 09, then you know what kind of destruction that can do. And it's going to take a very long time to recover from that. Now, if we come over and we look at the precious metal gold today, what is gold telling us out there? Well, gold basically rejected right off that 61.8 Fibonacci level, rejecting right off that high volume area, or at least it appears to be at this moment. If we can come down and probably clear this next high volume area somewhere about 32, 36, then I want to go ahead and give this the possibility of this ABC pattern on the way down. So if you like to jump on things a little bit early, it would make a little bit sense. We could measure something like this. The A to B leg is an impulse leg down. The B to C leg being the corrective leg. And we can see that projects all the way down here at about 3,019.9. However, that pattern will not be validated unless we break the swing low. So if we decide to pounce on this a little bit early and you try to push your runner targets down towards here, just note, if we cannot break that low, that is not going to be a validated pattern out here for the gold market. Now, I want to make you guys aware of 3 amazing prop firm deals. We have Take Profit Trader, 30% off all evaluation accounts, no activation fee. My Funded Futures, right now you get free reset with any evaluation account. And if you're new to My Funded Futures, you get 50% off any evaluation account. And Tradify, the leader in straight to funded accounts, 35% all accounts, not just the straight to funded accounts, but also the growth and advanced plans, 35% off. Use code Mike. And to take advantage of these offers, use the links in the description box down below. Then we come over and look at the SPY real quick. Notice today we have that inverted hammerish looking candle on the daily chart. We're finally starting to see some cracks in that MACD indicator. The MACD has been extremely strong, going all the way back to about April 23rd. So now are we going to work on trying to come back in and fill in the gap that was left behind from last week? Or are we going to simply get into it, tease it, and then rock it on the way back up? Keep in mind, if we do start coming down towards that gap, maybe we overshoot it, hit the 38% retracement, and maybe even this high volume node at about 560.17. On the 4-hour chart, we see the MACD indicator making its way down towards the zero line. But then as we come over and look at the 30-minute chart, look at what we have setting up. Today, we did get a bullish cross of the MACD indicator. And if price comes back down through these lows, are we going to set up some type of MACD divergence? I'm going to classify today's volume profile shape as a D as in dog, which usually indicates that we're likely going to get a breakout or breakdown from this pattern. Now, if we go ahead and we pull a Fibonacci retracement from the high of yesterday all the way down towards this low, notice right where we retraced back up to today, we just barely missed hitting that 50% level. Now, we could also make the case this could be part of a much larger ABC pattern on the way down. If we grab our Fibonacci extension tool, we measure the A to B leg, the B to C leg being the corrective leg, and we project down here for D, that gives us a price completion at about 575.38. Now, as we come over and look at the futures markets real quick, starting off with the 4-hour chart, keep in mind, we've had that push down. Now we have this lower level consolidation. Some of the areas we were talking about today on the live stream and really over the last couple trading sessions was this high volume node right over here, along with a secondary minus development area, then the gap support, gap being filled, and then an untested point of control at 56.78. Now that high volume node that starts to come in is going to be about 58.14. The top of the minus development area, 5806.75, down here to about 57.70. Now, the first time we normally come into a minus development area, the market will normally bounce out or it'll sit here and consolidate in that area. So be on the lookout. If you're looking to buy the market for a little bounce back up, this could be an area that you want to look for. Now, tomorrow during the live stream, we are going to be giving away a Take Profit Trader account. So if you don't want to miss the next time I go live, make sure you subscribe and you have the bell notifications turned on for all. Now, as we come over and look at the daily volume profiles with the 30-minute chart, one of the levels we were watching today on the live stream was kind of this structure breakdown point. One of the things I did say is this area has already been tested. When we sliced through it, we did come right back up and test it, but I was still liking that for a potential target area. Now, as we look at this, I want to go ahead and grab our Fibonacci retracement, swing high all the way down to the swing low today. Notice where the S&P came up to. Now, the futures markets made it all the way up to the 50% retracement. Bam, rejected right back on the way down. Also, if we look at the chart, we clear out the Fibonacci drawings, look, basically from yesterday to today, where are the larger candles forming? Are they to the downside or are they to the upside? Yesterday, the largest candle we had was a down candle. Today, we did have a decent up candle right up here, but then this big down candle at the end of the day was larger than this candle right over here. So I would still say that the bears are temporarily in control. Today, we were able to take out that P point. And as I'm looking at this, I'm really looking for the market to possibly come back down, breaking value area low, which comes in at 58.52.75. Point of control coming in at 58.59 with value area high right up here at 58.76.25. If we break value area low, I want to target the lows back from today. If we break the lows from today, then I want to refer back over here to the 4-hour chart. I want to focus at two areas. One, the high volume area. The second would be this minus development area. And if we happen to crack below that, then I want to target gap support and then potentially the gap being filled. However, part of the problem I have with the market making it down quite that low tomorrow would be the fact that we do have a holiday on Monday. Then we look at the economic calendar for tomorrow, and the only thing that we really have on deck is going to be the 10 a.m. new home sales. Other than that, we have a clean slate, and we chop around. Now, there are some FOMC members speaking. I don't think it's going to be a market moving event. Then we come over and look at the QQQs real quick. On the daily chart, we have that large gap. We have the 38% retracement. Look at the MACD indicator down below us, though. MACD indicator lines trying to pinch together. Are we about to get that cross to the downside? Then on the 4-hour chart, you see the MACD indicator is crossed to the downside. But on the 30-minute chart, we could possibly set up some type of MACD divergence. If we break the lows over here, let's watch. Do we break and then basically run right back up? That's something I most certainly want to pay attention to for tomorrow. Then as we look at the futures markets real quick, notice this structure breakout point we still have not come back and tested yet. We've done a fairly good job of auctioning this minus development area. Think about if you were to drag this profile right over here, slide it to the left, you can see we've built out a lot of volume right here, which would fill in a good chunk of this minus development area to the left. Now, that structure breakdown point, I'm still looking to target if we see signs of weakness tomorrow, 20,995 to about 20,953. Anything below that price point, I'd want to target this next minus development area, somewhere in the ballpark of 20,687 down here to about 20,594. Below that, I'd want to target gap support, then the gap being filled, and even that untested point of control, 20,135 and a quarter. However, I just don't think we're going to make it all the way down there this week. I do think that is going to be a coming attraction. I just don't think it's going to be this week. Now, something where I boofed up today on the live stream, you can see this zone that we have marked off below us. This is basically a candle wick to the candle body of yesterday's low. This morning, we're coming down below that. Then as we started getting back above it, I went short, and continued to give the market donations out there. However, I was able to get back today, but this was a just slip up on my part. I think I was a little bit too confident from all the trading last night, passing the 20 Apex accounts, getting the Tradeify account to where I'm able to request a payout tonight once it updates, passing the My Funded Futures account yesterday and trading that last night, along with trading my funded Take Profit Trader account. I think I just came in a little bit too confident today and basically messed this up. Now you can see we did rally up a bit today. And if you look, we had this white line, which was basically a minus development area from the prior day. We did not make it all the way back over towards this area. Then we got a rejection on the way down. Well, if we pull our Fibonacci retracement from the swing low up here towards the swing high, notice where we pulled right back to the 50% level. Now, if the market turns and starts running back up, that could set up an A to B equals C to D pattern on the way up. And that would bring us all the way up here to about 21,456. However, if we really start breaking down below the 61.8, then I'd want to watch for the market to come all the way back down, retest the lows from today. Then anything below today, we'd want to refer right back over here to the 4-hour chart and all the levels that we just spoke about moments ago. Now, if you don't want a difficult time requesting payouts with Tradeify, then make sure you don't do this one thing right here. And to see what that is, watch this video right here.